It's your first time buying a car. Here are the 5 things you need to know to not get screwed and to have a good experience. My dad sold cars for 40 plus years. Walk us through them. What's number 1?
Well, number 1 is always get pre-approved for a car loan before you actually go into the dealership as a first-time buyer to buy a car. And the reason for that is so that you have an understanding as to what your budget could be based on what that financing looks like through your pre-approval.
And I think it's important to understand here. This is for new and used cars.
Yes.
And in most instances, first-time car shoppers are financing. Most car shoppers finance. So if you're in a position you can pay cash as a first-time buyer, that obviously takes this one out of the equation. And most first-time car shoppers can't actually get approved for leasing because leasing requires more of a credit history.
Yes.
So you're probably going to finance, and if you are going to finance, that is the biggest profit center at the dealership outside of parts and service. And so it's critically important that you have a pre-approval and you know what you can afford before you go to the dealership.
Yes.
That makes a ton of sense, Dad. What's number 2 for first-time car shoppers?
Well, what I would say is if you're a recent college graduate and you're looking at a new cars only for this one, check with the manufacturer of the brand you're looking at and see if they have a recent college graduate program. Most manufacturers do. In many cases, it is a $500 rebate. And if you apply through the captive lender for financing, if you don't have any derogatory credit on your limited credit report, they'll qualify you as a Tier 1 customer, which is extremely important. So find out if there is a recent college graduate program for the manufacturer you're looking at, and if there is, bring along the documentation that they require, which is usually a copy of your diploma or your transcripts.
You said it's incredibly important. Let's break down why. Credit tiers for getting an auto loan are broken into tiers. Yes. And you want to be Tier 1. It goes Tier 1, Tier 2, Tier 3, Tier 4. And they are subvented, which means bought down interest rates. They're meant to be incentives to get people to purchase vehicles.
Yes.
So when you see commercials for 0% financing, 0.9% financing, 1.9% financing, most people actually don't qualify for those. Only Tier 1 credit customers qualify for those. And so what you just said is if you're a recent college graduate, some of these programs give you access to Tier 1, which could be 0%, 0.9%, 1.9%, which is way better than non-subvented interest rates, aka what you could get through your bank or credit union, or Tier 3, Tier 4, the lowest tier that you could potentially qualify for. So huge incentive there.
Yeah, the thinking from the lender is, well, if you were smart enough to go to and graduate from college, you're probably smart enough to understand the importance of credit and paying back your loan on time.
Again, that's only for new vehicles because the manufacturer's captive finance arm is subventing, that's the word. They're incentivizing that interest rate. So not for used cars, but a really important one. Thanks for bringing that up.
Yes.
What's another first-time car buyer tip, Pops?
First-time car buyer tip, new or used, if you have limited credit and you're having difficulty getting a pre-approval, make arrangements to have a cosigner available if it's necessary.
Let's break down what is a cosigner. For someone who's listening and watching this video, they may not know what is a cosigner, and please reinforce how critically important it is to treat that cosigner as if they were yourself, because I'm pretty sure it impacts their credit history too. Help us understand.
A cosigner is a co-obligor. Okay, so what does that mean? They are obligated just like you are in order to see to it that that loan is repaid in a timely fashion. So if you fall behind on the payments, they can then go, the lending institution can go to your cosigner and ask them to make the payments. So if it's not only impacting your credit report and your credit history, it can be impacting your cosigner's credit report and their credit history. But a cosigner, someone that has a credit history that banks can look at, can help a first-time buyer get a car loan at a better rate because you have somebody with a proven credit history that is willing to go on the loan and be responsible for those payments if the borrower themselves cannot.
Huge. Critically important to understand that, and critically important to line someone up, especially on those used car loans if you don't have the recent college graduate, things like that. Makes tons of sense. Pops, what's another first-time car buyer tip?
Know your budget and stick to it.
Yeah, you have, if I'm not mistaken.
Yes.
And I'm going to extend this one to also understand what the total cost or total monthly payment, because I know a lot of you out there will really, at the end of the day, just care about your monthly budget.
Yes.
recognize everything that goes into that. So talk about your 10% rule.
Okay.
And then let's make sure we also hit on the fact that insurance premiums are through the roof, and they are causing, especially first-time shoppers, they're going to be sticker shocked when they see how expensive insurance is. So what's your 10% and what's the total cost?
My 10% rule is that no more than 10% of your gross earnings on a monthly basis should go towards your car purchase. So let's say you make $5,000 a month.
60 grand a year. Love it.
Okay. 10% rule would be $500 a month going towards your car. Not going towards your car payment, going towards your car. What do I mean by that? That's got to include your car payment and your insurance premium payment. It should also include fuel and maintenance. Now, if you're buying a new car, you should have limited maintenance. If you're buying a good quality used car, hopefully you should have limited maintenance. But that $500 should cover everything. Now, can you stretch a little bit? 15% perhaps? No more than that. You don't want to become car rich and cash poor.
Yeah, love that. And check out back on the CarEdge.com car search. Pretty much every vehicle, we will show you that total cost of ownership. It's like a little circle. And it shows you what your total cost of ownership will be expected for the next 5 years with that vehicle. So expected insurance costs. And we also have an insurance calculator where you can put in more information, your driving history, your age, your state. It will give you an estimate for what your insurance costs will be for that vehicle. So we've got a bunch of resources there that will help you be more informed and hopefully avoid that sticker shock. But the 10% rule hits very, very close to home. You do not want to be spending 25% of your gross income every month on a vehicle. And you don't want to be confused when you thought you were under $500 a month, but then you add on all these other ancillary costs. Next thing you know. All right, Ted, what is your final tip for first-time car shoppers?
Know what type of car you're looking at and get an insurance quote as to what your insurance will be on a monthly basis for that type of car. This way, you're not going to be shocked after you've purchased the car to then find out, oh my God, the insurance is $250 a month on top of my car payment. You need to know that in advance.
So let's really dig into this. Can I call up an insurance company and get a hard, firm, quote?
Yes.
Boom. There you go, folks. Do it. Do the research back on our website. We appreciate it.
You look up a car on a dealership's website. Get the VIN number. Call an insurance agent and say, I'm interested in potentially purchasing this car. I have a VIN number for this car. I know you're going to want my information. Could you give me some idea as to what the insurance payments are going to be on this particular vehicle?
I'm even thinking, Dad, because it's like we have partners and we've built back on CarEdge.com like an insurance marketplace where you can get competitive quotes.
You can do it there.
You can do it there. You can. You don't have to feel bad like you're wasting someone's time. It's their insurance companies. They make a lot of money. They'll be happy to get your business whenever you actually do purchase.
Yes.
So take the research a step further when you're a little bit further in the process and actually go get quotes. I want to give one more piece of advice to first-time car shoppers.
I'm listening.
Know that you can negotiate, and if it is taxable, it is negotiable. That is my dad's key theme when buying a car. You know that you can negotiate, and anything that is taxed, and the dealership's going to throw all sorts of things at you most likely that are taxed. Add-ons, fees, extra products, things like that. If it is taxable, then you can negotiate that. And you ultimately negotiate that out the door price, not the monthly payment like we talked about earlier. So remember that. If it's taxable, it's negotiable, and you can negotiate, and you should feel confident to negotiate. And you can do a lot of this online. You don't even have to go to the dealership.
And even as a first-time buyer, you can negotiate. Doesn't mean you're going to negotiate as well as somebody that's more experienced at it, but you'll never get what you don't ask for. So don't be afraid to ask for a lower price. And when you do ask for a lower price, try and have some market research that would back up why you're asking for the price you're asking for.
And if you do want a professional to do it for you, go to CarEdge.com. We have a concierge car buying service, a negotiation service as well. So it could end up just being worthwhile to pay us and our team to do it on your behalf. But that's food for thought for another time. Pops, thank you as always.
Thank you.